Well, hey there, everyone. Happy Tuesday, February 24th, and welcome to Chart This with Dave Keller. I'm your host, Dave Keller, coming to you from a classic wintry day here. Overcast, highs around 50-ish, we'll say, here in Redmond, Washington. Hope you guys are doing well. My heart goes out to those of you buried under feet of snow. I'm also super envious. We lived in Boston for a number of years. At one point, I have a picture of myself. Had I planned ahead, I would have had it available for you. Maybe I'll remember for tomorrow's episode. And we had 6 feet of snow in our front yard. It was an amazing blizzard, probably 2011, 2010, 2011-ish, somewhere around there. It was an absolutely insane nor'easter, and it just dumped so much snow on us. It was awesome. We lost power for a week. We bonded with our neighbors, had great fun out in the snow. It was awesome, but I have vivid, painful memories of shoveling that much snow. With that in mind, hope you guys are all doing well, hanging in there wherever you're tuning in from. We're going to talk about a decent bounce to the upside today. Monday was all about the big distribution coming out of the open. Basically the rest of the day remained stagnant. Today, kind of the opposite. Big rally in the morning, kind of holding steady in the afternoon. All eyes toward two things here. The State of the Union tonight, here with President Trump addressing the nation. Remains to be seen what sort of what market moving potential there would be there. Usually it's more of a political presentation than something that is going to significantly move markets, but who knows? We're in the who knows era of what could be reported and what could happen. So we'll see. Maybe something related to tariffs could excite the market or make the market very nervous tomorrow. More likely than not, it's going to be less of an issue, and it's going to be more about NVIDIA's earnings tomorrow. I would say bulls are hanging their hat on NVIDIA's earnings while we've had some questionable news in the AI front, some less than optimistic action in some of the AI-related names. Big, nice, juicy report from NVIDIA could right all wrongs and just resume this uptrend phase. The other side, though, the dangerous scenario is some sort of, negative news, and that could be a challenge. We do have the chart of NVIDIA queued up, which we will talk about with you in a moment. By the way, if there are other things we have not talked about or other things you'd like us to address on the show during a mailbag episode, please take a moment and use the comment section in our YouTube channel to ask any questions that you have. We appreciate your questions so much. Great to hear from you, and maybe we'll answer one of your questions in our next mailbag episode. Here's what happened today. We're going to talk about just the recap of the market action here today, as always, from a technical and behavioral perspective, which is the lenses with which I view the world as an investor. We'll look at the market carpet on stock charts, which is a heat map style visualization showing us strength and weakness in sort of sector and group themes. Then we will look at some charts that I've hand selected to highlight some key names, including NVIDIA, including JP Morgan testing key support as the financial sector struggles. Lots more charts as well. Here's what happened today. The S&P 500 closing just below 6,900. We'll call it 6,890, and that's up 0.8%. It's almost like yesterday's action was flipped over, right? Monday, we have the big sell-off in the first hour and a half of trading and then sideways action through the remainder of the day. Today, really the first couple hours, a nice rally out of the open. Basically taking us from yesterday's close back up to Monday's open, but not really getting much above there, right? So yesterday and today kind of holding steady around that 6,800 to 6,900 range, which is kind of right in the middle of this sideways trend we've been talking about for quite some time. So we remain range bound, a bit down day followed by an up day. No real breakout yet. I think NVIDIA's earnings potentially could be the catalyst we've been waiting for. We'll see. The NASDAQ composite, by the way, up 1%, we'll call it. Mid caps and small caps, all about the same. So no real differentiation. I think that's one takeaway today. The Dow, the S&P, the NASDAQ, mid caps, small caps, all up about 0.75% to 1%. No real significant story there, I would say. Sometimes we've had a dramatic difference between the Dow and the NASDAQ, or large cap to small caps. Not the case today. I think these are pretty even. The VIX whipsawing again, goes from above 20 yesterday to back below 20. We're down about 1.5 VIX points today as the options market settles down a bit after Monday's excitement, volatile outburst, we'll call it. So the VIX right down around 19.5. So if the VIX can remain the rest of the week below 20, that would be a pretty encouraging sign, I would say, for the bulls out there. Looking at the bond markets, kind of mixed and relatively quiet. The 10-year yield not too far off of where it was yesterday. We're still just above 4% there. The long bond yield remains just below 4.7%. And the 5-year point right around 3.7%. The TLT did drift slightly higher. And I think that's one of the big, narratives I've been observing here in February has been stronger bond prices, lower interest rates. And that's a bit of a stark contrast to the S&P, right? The S&P is flat, bond prices going up, bond rates or interest rates going down. We have a chart of the TLT to share with you in a moment. Also the chart of the 10-year treasury yield as the yield curve flattens a little bit or becomes less of a steeper condition, which has been the trend here in 2025. Gold and silver pulling back a little bit today, but they rallied out of the open, which I would say is pretty encouraging, right? The GLD kind of accelerated into Monday's close. Today we opened down here around 470 on the GLD, but see how we closed near the highs of the day. So we're technically down from yesterday's close. That's up here. So we're lower than yesterday's close, but I think the rally out of the open is pretty encouraging, right? So what that means is we gapped lower at the open, and silver had a very similar configuration. Lower open, but then during the day there's accumulation. This illustration, right? Looking at yesterday's close, today's open, and today's close. That's why candle charts are so valuable, and particularly when I'm looking at shorter term time frames, I almost always gravitate toward candle charts. I don't show a ton of those on the show, but when we're looking at kind of short term movements, I'll usually switch to a candle chart if you think about it. And that's because I think that really helps you understand this sort of dynamic, right? If you're looking at 2 years of data, this sort of 1 to 2 day move shouldn't matter a ton, right? Because those are little blips within a longer term trend. But if I'm looking at like the last month or the last 2 months, recognizing a day like today with a strong Monday, a lower Tuesday open, but a higher Tuesday close implies that there's investors buying in on weakness or traders buying in on that weakness at the open. I think that's a good sign. The chart of gold and silver, I would say overall still in a pretty constructive pattern. And these kind of 1 to 2 day, phenomena, I think play into that and sort of create that larger, more constructive pattern on the chart. Bitcoin down slightly, although to be honest with you, fairly quiet day for cryptocurrencies. Sort of everything, if you look, not a bunch of big percentage swings. This is more of a quiet day. This is more the market holding its breath, as it were, because I feel like many are bracing for news from NVIDIA tomorrow, and certainly between the State of the Union and NVIDIA, there'll be a lot to talk about, I would imagine, on tomorrow's show. For now, however, Bitcoin down about 1%. Ether prices flat. Bitcoin is holding steady just above 64,000 here over the last couple hours. Did get down to around 63,000 over the last 24 hours and rallying a bit here during the equity trading session. Most of the top 10 coins in the red, as you can see. All right, the 11 S&P sectors, it's growth at the top of the list here, which has not been too often that we've said that here in 2026. But the XLY, the consumer discretionary sector, up 1.5%. That's your top performer. I can't remember the last trading day that consumer discretionary was at the top. And I definitely can't remember many recent examples of where the XLY and the XLK were number 1 and number 2. Technology up 1.3%. And followed close behind by industrials up 1.2%. Utilities having a pretty good up day as well. On the downside, you'll notice only 2 out of the 11 S&P sectors were down, and energy was pretty much flat for the day. So we'll call it healthcare is really the only sector that was down today, down 0.4%. Energy flat. Real estate third from the bottom, up about 0.25% here. So a decent day in terms of sector movements. We're back to growth over value. No real theme, I would say, with value versus defensive. It's more growth over value as a key theme today, I would say. Looking at the stock breadth, pretty encouraging. Yesterday, the breadth was pretty negative, and yesterday's action was enough for the McClellan Oscillator to go below 0. I did grab that chart just to show you. I would guess, based on what we're seeing today with the breadth data, probably the McClellan Oscillator pops back above 0 today, or very close to doing so. But today, about a 2-to-1 ratio on the New York Composite Index. 64% of that exchange up, only 33% down. S&P a little bit better, 71% advancers. So decent up day, which is encouraging. That's something we've not really been able to say for quite some time. All right, just making a note here. Let's finish off looking at the Magnificent Seven and Friends. Another good update here. So, hey, encouraging sign going into NVIDIA's earnings is that some of the other growthy stuff was up. Bad news is NVIDIA itself was not up a ton, but that's okay. We'll take what we can get. Netflix, again, consistently one of the worst charts, if not the worst chart on this list, up 2.7%. Tesla up 2.4%. Apple up 2.25%. Broadcom, the laggard here. The bad news is that's in NVIDIA's sector and in NVIDIA's group. So Broadcom down 1.5%. Alphabet and Meta are basically flat today. And here's NVIDIA up about 0.2%. Again, can't overstate the importance of that chart and that stock. What's so interesting, by the way, is NVIDIA is, not too far off of all-time highs, but just pounding out this incredibly toppy-looking chart pattern over the last 6 or 7 months. And we'll go through that in a little bit of detail here in a few moments when we get to the chart review portion of the show. All right, we're going to look at the heat map. Quick reminder, we appreciate you tuning in. As always, hey, would not hurt to tell a friend, like the video, all the things you can do to help promote what we're doing. If what we've done has been helpful to you, our goal is to help a bunch of different investors, help them make better decisions, help them get out of their own way, and appreciate the value of technical analysis to improve their market awareness. And if you know someone that could benefit from that, can't tell you how much we appreciate you sharing the show and our content with others. Please do so, and take a moment to ask a question if you could. Questions are always appreciated. Feedback's always fun. Just use the comments section on our YouTube channel. All right, looking at the heat map, bit of a better day than we saw yesterday, right? Yesterday we had sort of bigger swings with some bright red and some bright green. Today a little more neutral, but certainly more skewing positive. Not a lot of red on the heat map today. Certainly more of a greenish tinge to the heat map. But let's look around and focus on some key themes here. Starting with technology, obviously technology in focus with NVIDIA's earnings coming up tomorrow. It's worth noting NVIDIA, not one of the better charts today. Apple, out of the mega cap technology names, probably the most compelling movement, up over 2% today. Apple arguably in a big symmetrical triangle or coil pattern. I did grab that chart. We'll spend some time just looking at that so we understand it. AMD is kind of in there with NVIDIA. I mean, AMD was up 8.8% today, so that's good. I actually think I grabbed that chart already. Oh yeah, we don't need to talk too much about it. We'll come back to AMD, but testing key support, and we'll come back to that. Similar to NVIDIA, I think AMD and NVIDIA too, just absolutely crucial charts because they are so close to a pretty significant breakdown. And if charts like AMD and NVIDIA are breaking down through clear support, I'm just not sure how bullish I want to be, even if other sectors and stocks are doing well. Just, can't imagine you want to be particularly bullish about the major benchmarks. However, it also means we are right at clear support, which is where buyers have come in before. So let's keep an eye on it. I'm also noting, charts like CRM may be important to look at. Nice bounce today. And I don't blame you with a stock that's up 4% with the biggest kind of update we've seen in quite some time. It's been oversold and just coming out of that oversold region. I think from a technical perspective, what do you do with a move like today? I think the answer to that question depends on how you describe yourself, right? If you're a swing trader or a position trader, and I am well aware that there are many other ways you could describe yourself, but I'm kind of highlighting two. When I think of people's use of the technical analysis toolkit, I kind of think of it in probably three different main ways, right? You have a day trader kind of time frame where you're looking intraday quick in and outs, which is more scalping. I really don't get into that at all, as I'm sure if you watch my content, and I'm assuming a lot of you don't either, or else you'd probably be watching someone else right now. Then you have swing trading, which I do a little of, but it's less of my primary approach. But swing trading is betting on a couple days, couple weeks, right? Short-term mean reversion. Position trading is something where I think you're looking a month or two plus down the road. That is more looking years down the road. This is more of you're taking a position and you're betting on accumulation over a period of time. That's where trend following kind of works. That's kind of the approach you want to be thinking about. So those are kind of the three main time frames where traders use technical analysis. There are much longer term ways, but I would argue those are less technical, and charts are still super helpful, but less like you're using a ton of indicators and stuff. These are the three kind of main general time frames. So I think if you're a swing trader, an indicator like this can be pretty meaningful, because what this chart is telling you is we're obviously in a downtrend. However, we've been oversold for a while. And when we go in the oversold region, looking for just a breakout above that oversold condition can often be a tradable swing. Usually tells you like the next week to 3 to 4 weeks or so is most likely higher on this kind of daily chart. So most recently, we had an oversold condition in mid-January. We came out of that oversold region here, basically told you a short-term turn higher. And what I have seen some people do, which I agree with, is right, once you enter the oversold condition, maybe switch to like an hourly chart, try to maybe better time that potential swing higher. If that's swing trading was my main gig, I'd probably be pretty excited about CRM down in the oversold condition, looking for a day like today with a bounce. Maybe that signals a bit of a move higher. You have a little bullish divergence here with the most recent lows being marked by stronger momentum. It's encouraging. But as a position trader, am I seeing enough on this chart to be like, wow, this is a good upside reversal? 100% no, because we're still making lower highs. We're still below the moving averages that have all kind of spread out and are all sloping downwards. So whether or not this chart looks interesting, it's all about the time frame, right? Swing trading, this is interesting. Long term, maybe not so much. All right. What else on the heat map here? Other thing that I would notice is, besides technology, where I'm seeing some interesting opportunities, I would say where you're not seeing an upswing is in the hard drive names, right? Seagate, STX, Western Dig, WDC. I mean, still a good chart in the fact that we are above the 21-day EMA. I mean, just look at the consistent uptrend we've had off the April market low. It turns out like the trade of the decade, as far as I can see, is buy Western Digital at the April market low at $30 on an adjusted basis, and that's gone up 10 times. It's around $300 a share. It's around $270 right now. I mean, what an incredible run, and just a beautifully consistent uptrend, right? I mean, that's just a crazy consistent uptrend. The RSI has been above 50 for almost the entirety of the last 9 months, which is pretty remarkable. So today we're pulling back a bit. So interesting on a day when like technology's up, on a day when the benchmarks are up, what technology names are not up? And Western Digital and Seagate are both down. Low single digits. Western Digital still in great shape in the fact that it's above an upward sloping 21-day EMA. We've had pullbacks to that level before. Those have generally been pretty good, pullback points. The RSI is still above 50, so this is still a strong uptrend, but the bearish divergence is what concerns me here, right? Look at the action in the last couple of weeks. Look at the weaker momentum, which is something to be concerned about. You also have these long upper shadows on some of these days. You call that a shooting star candle on the most recent, move above $300. Then we retested that here. And again, long upper shadows really just suggests lack of upside follow through, because a long upper shadow means the open and close are near the lows, which means we've opened, we've traded up a bit, but closing more toward the lows of the day. I'm seeing a bunch of days with long upper shadows here. More of a toppy kind of configuration. We'll see if that plays out, but I think that's one thing to note if you have positions in those particular names. Communication services noticeably very, very flat. Random names like Netflix or Take-Two, which both of those have been pretty underwhelming charts. Both of those trying to bounce off of very depressed levels. But I think the real story is that the larger names in that sector really didn't move a whole lot. It's kind of a quiet day there. Financials finally getting a bit of a break after having an absolute disastrous week here. These charts are in various degrees of not good. JP Morgan testing key support. I did grab that chart to look at in a little bit. Visa and MasterCard have already broken down in meaningful ways. Charts like Capital One that are up today are bouncing off of fairly weak levels. So this is a sector that I would say, still for me is a very underwhelming sector from a technical perspective. I'm not finding a lot of charts that look particularly interesting to me in this sector. I'm much happier finding great ideas elsewhere. I would say in the financial sector, right? I mean, it's noticeable how stocks like Franklin Resources, ticker BEN for Ben Franklin, are distinguishing themselves by the fact that they're not as bad as the rest of these, right? JP Morgan testing support, key support, major kind of toppy kind of patterns Charts like Visa and MasterCard already breaking down. Charts like Franklin Resources look remarkably strong, and they're outperforming the S&P in 2026, but really outperforming the financial sector. So that's one of those where if you have to be in financials for some reason, those are the kind of charts I'd be looking at. And to be honest with you, probably more insurance companies than anything else. PayPal was one I didn't grab. And I'm going to look at it very quickly, and then we really need to move on, but I'm just finding a lot of interesting ones. PayPal's an interesting one. And so PayPal is an interesting one to talk about because it gapped lower. We drifted lower for a couple days, but then look how we've actually found our footing. And on a chart like this is the big gap down on earnings, right? And when you have a big downside gap on earnings, that implies, this is a dangerous situation. And obviously we've revalued the stock dramatically from one day to the next. What you're looking for are signs of accumulation, right? And that's what I often say when a stock's like in this sort of moment, when it's in a confirmed downtrend, right? The question is, where do you see signs of accumulation? When do you see signs that investors are actually getting interested? What I'm seeing this week certainly feels like signs of accumulation, right? We've actually regained that gap. So I often think of the whole gap as like levels of support and resistance. So breaking above the lower end of that gap, I think is pretty encouraging. At least holding that lower end of the gap would be pretty good. That's around 43.50 or so for that peak here. So getting back above that level yesterday and then following through above there today is pretty encouraging. It's still not my favorite kind of chart. I'd much rather buy stocks that are in a bigger accumulation phase. But if I'm more of a bottom fisher, falling knife kind of investor, a chart like this can be pretty intriguing because what that means is we've completely revalued the stock down here. But now we're seeing buyers come in. It's up another 6+% today. Could be an interesting opportunity going forward. Last things I would say, boy, charts like GEV are strong and keep getting stronger. Friendly reminder that stocks and uptrends, in my opinion, should be treated as innocent until proven guilty. And I think you're definitely seeing that. Last thing would be consumer staples. Not a great day generally, but not a lot of red in this sector. These stocks are generally moving higher. Charts like BG are in primary uptrends, so underperforming today, but something to watch. And watch Hormel HRL back above the 200-day moving average. Paul Tudor Jones famously said, "Nothing good happens below the 200-day moving average." So let's get interested when something gets back above there after being below there for so long. So a nice upside rotation in a food products name. We've talked about ConAgra brands, CAG in that same group. Another food products group has been an ugly place to be, but starting to get better. All right, we're going to look at some charts here for the remainder of the show, but thanks and appreciation to one of our partners, Koifin. You can find more information about their platform and get 20% off as a new with a new subscription at marketmisbehavior.com/Koifin. Koifin is one of those platforms that I use every day. I was using it earlier today. I was looking at some Italian stocks, and their coverage of international markets is pretty deep, deeper than other platforms that I have access to, which I really appreciate. I was also looking at some ETF holdings yesterday, and that's my go-to platform to do that. You can bring up ETF, immediately see what stocks are held there. You can look at sector weightings in different ETFs. Really helpful, particularly if you invest in ETFs. If you keep it at just the surface level, you're missing the benefits of really understanding. I think part of the due diligence is understanding that next level down, understanding what bets you're really making. When you buy an ETF, you're not just buying an ETF ticker or the name of the ETF or the theme that they say they're doing. You're basically gaining exposure to a bunch of individual names. So it's important to me to understand what those stocks are and what kind of bets I'm making, because a lot of times there's sort of unintended bets like sector overweights or over concentration or things like that. Koifin has helped me do that due diligence very, very well and understand expenses, but also their ETF holdings as well. Find more info at marketmisbehavior.com/Koifin. If you're a financial advisor, they have some really cool tools for advisors that I don't personally use, but for my advisor friends and clients, I know they found it pretty valuable. Again, go to marketmisbehavior.com/Koifin. They're offering 20% off their subscriptions right now. Great time to check it out. All right, let us go through some charts, and we'll call it a Tuesday here on Chart This with Dave Keller. So the S&P remains firmly entrenched in our sideways trend. I'm curious 24 hours from now, after we've gone through a State of the Union. And again, I try desperately to avoid any sort of political debate or discussion. And if you never really understand my political leanings from watching the show, I feel like that's a job well done, because I feel like there's other places where I could make a statement of some sort, but not here. This is about charts and about the markets, which I think are politically agnostic. I think this is something we all should be using, regardless of our political leanings. However, we have to think about the news and potential market implications of political decisions. So, I mean, what stands out would be any sort of color on tariffs. Has obviously been a pretty, a much debated issue here in the last 72 hours after the Supreme Court struck down President Trump's tariff policy. Now he has basically said he's going to use other rules on the books to try to, continue using tariffs. Now we heard FedEx, basically suing to get their tariff, payments back. So we'll see. So if there's some sort of color that, the markets could react to, I could see that being it. And obviously there's all sorts of things that could be mentioned tonight. But the real story, of course, NVIDIA's earnings. With all that in mind, though, I mean, the S&P going into those events completely sideways, right? The S&P in the short term on the tactical time frame, we are dialed in between 6,800 and 7,000. I would say on the tactical time frame, break above 7,000, pretty bullish. Break below 6,800, not so bullish. Break below 6,550, very negative, very bearish. For now, we just have to wait and see. The momentum is neutral, right? So the price, the trend in the S&P is sideways. The support and resistance are very clearly defined. The momentum is clearly defined. So this is going to resolve itself in one of two ways, and it could happen tomorrow, Thursday, as we digest some of this news flow. A break above 7,000 with the RSI powering above 60, that's your bullish outcome. A break below 6,800 with the RSI breaking below 40, that's your bearish outcome. One of those two things is most likely going to happen by the end of this week. I think that's going to be a signal to be watching for and to be following. Now, let's look a little bit deeper in terms of the performance of these of the benchmarks and of the individual stocks below there. The breadth data is still generally quite positive, and we've covered that, I think, in a lot of different ways. And as soon as that longer term breadth picture changes, I promise I'll make a point to show you. Haven't really seen that. It's been pretty consistently positive here, right? So long term measures of breadth, the S&P is basically flattened, but enough stocks are doing well that the breadth generally is pretty good. In the short term, though, we've seen a bit of a pullback in breadth this week. This is the McClellan Oscillator. On stock charts, it's updated at the end of the trading day. So this is not updated through Tuesday's close. This is through Monday's close. We didn't have Monday's data when we were doing the show yesterday, but just want to note that the McClellan Oscillator did dip below the zero level on Monday. Today, given what I saw with breadth, I wouldn't be surprised if we bounced back above the zero level. And we've had a couple like 1 day flips below the zero level. Those usually aren't that big of a deal. That's just a short-term reversal. But if we spend meaningful time below that zero level, that would be a concern. The Hindenburg omen, which is what we're seeing here, fired again yesterday. The Hindenburg omen, as I'm sure you know if you followed my work, combines three different indicators. Looks for the New York Composite Index to be in a consistent uptrend. Looks for the McClellan Oscillator to dip below zero, which, as we highlighted, it did yesterday. And then you need new highs and new lows on the New York Stock Exchange, both to be at least 2.5% of the NYSE listings. And that actually happened on Monday's session. So we once again, I think we're still part of this same cluster of a number of firings of this indicator that started at the end of January, continues to fire through the end of February here. I mean, that's generally not bullish. Is that a huge bearish signal? It depends, right? And that's what I think you need to wait for. For me, the McClellan Oscillator on its own is not enough. The McClellan Oscillator tells me to be ready for some rotation lower. This is the warning sign. Now we need to look for the validation. We've seen that in some previous stops. We've seen that most recently in October, November, where we never really had a meaningful breakdown after that McClellan Oscillator was, the Hindenburg omen was confirmed. But we are back at a time when it's firing. What this tells you is we are showing similar conditions to a bunch of other previous market tops. That's how this indicator was created. The creator looked back at a bunch of market tops and looked for consistent criteria, macro technical criteria. He came up with this combination, which was pretty common at major tops. It will give false signals, but again, there are very few major tops that have not had this indicator fire. It's firing now. just tells me to not be overwhelmingly bullish at this particular moment until and unless we can resolve this to the upside. Now, when I think about what has changed from January to February, I would say the strength in the bond markets has been one of the biggest shifts. If you look at the $ TNX on stock charts, that's the 10-year Treasury yield, trending lower here in the month of February. At the end of January, we're up around 4.3%. Now we're testing 4%, which is where we bottomed out, essentially in September and October, November. It's all right around 4%. We're kind of right back to those levels. So rates have been going higher in the fourth quarter. We've given back all of that rise in rates, and now we're back down to the lower end of the range for the last 12 months. And indeed, we're actually back down toward where the 10-year Treasury yield was, just before the April 2025 market low. So as the long end of the curve has come down, the yield curve has been flattening a bit. It's still a generally normal shape, but these two series go down. These are comparing two different parts on the Treasury curve. So these levels going down basically mean the yield curve is flattening a bit. That usually represents a lack of optimism about economic growth. Flattening to inverse yield curve implies we're not really optimistic about economic growth going forward. As a result, investors probably buying bonds and getting more defensive. The long end of the curve comes down a little bit. That's sort of what's happening here. So the trend in rates generally lower. Tends to be good for things like home builders. Tends to be good for companies that have to borrow a lot of stuff, like small cap companies. So two things to think about if rates continue to trend lower. And here's the chart of bond prices. This is the TLT. I wanted to highlight here, we're rallying on the TLT. We're right around $90 a share, which is where this big head and shoulders top played out in the fourth quarter of last year. The momentum overall has been pretty consistently in the bullish range since last summer. So overall, it's basically suggesting that bonds are still in an uptrend. So the stock to bond ratio is starting to favor bonds, certainly in the month of February. And that's an emerging theme that I think will be important to follow. All right, tomorrow we have NVIDIA's earnings. We'll finally get some closure there, hopefully, and get a sense of what might be next. But I think it's worth noting AMD, while up 8.8% today, which is a pretty resounding up day, we're still in limbo between the 50 and 200-day moving averages. Break above 220 would be pretty encouraging tomorrow. Break below 190 and even worse below 185 would basically make a new 3-month low and also break the 200-day moving average. So that's what AMD looks like. Here's what NVIDIA looks like. I'll come back to that point and figure chart in a moment. NVIDIA kind of in a similar boat, right? We have clearly established support. We have the 200-day moving average. Both of these stocks have been sideways. They've been in a sideways pattern for a while. They have clearly defined support that they've been testing. We are very close to those levels. AMD is testing support this week. NVIDIA is up above support. It's actually up here around 195, while the support's down here around 170 to 175. Tomorrow for earnings, I think it's watching, this chart going into earnings, certainly coming out of earnings on Thursday will be whether those support levels can hold. And I think a break above 195 on NVIDIA would be a pretty encouraging move. AMD getting back above 220, back above the 50-day would be encouraging as well. Shout out to my friend and mentor, Bruce Kamick. Bruce, I have to always be thankful for and appreciate because he, worked with or talked with Charlie Kirkpatrick, and the two of them approached me about taking over Charlie's course at Brandeis University back in the day. Charlie started a course in technical analysis at the business school there. I remember meeting up with Bruce and Charlie, and then met again with Charlie, and then ended up shadowing him a bunch of times, and ended up taking up over his course and taught that as an adjunct professor there for a number of years and really enjoyed it. Then passed that off to other really capable CMTs like Dave Lundgren and John Kolovis, who teaches it now. But shout out to Bruce Kamick for posting this on social media. I think it was on LinkedIn. He threw this around, which is basically a point figure chart. This is using the percentage scale point figure chart. And I know I don't show a lot of point figure charts. That's probably my bad. It's a great kind of classic charting mechanism. I love that it's different than the bar charts and candle charts that so many of us live and breathe every single day. It's a little different. And I love approaches that are a little different and kind of give you a different angle, a different visual. This is a charting methodology that really became popularized on the trading floors in Chicago, where traders would go over to the Bloomberg machine or whatever they could get to and literally use graph paper, X's and O's every day to update their hand-maintained point and figure charts. X's are uptrends, O's are downtrends. I'm highlighting this fact, and Bruce's chart shows the fact that The columns of X's are all at this very consistent resistance level. And that's one of the really cool things about point and figure charts. The resistance and support levels almost jump off the page. We're really, really close to a breakout. And NVIDIA gets up to like 195 this week. That would be a new column of X's. That would be what's called a quadruple top breakout, which is uncommon, but pretty bullish if and only if that can happen. Meta is sort of in a really weird pattern here. And I'm looking at these kind of higher lows and I'm seeing this pullback to this point. I'm wondering if we find some sort of stability and confirm a higher low and go higher. If we don't, 600 is the level to watch. Those are the previous lows, but Meta in a very wide price swing right about now. Apple dead sideways. This is a stock that is stuck in limbo. Lower highs, higher lows. That's called a coil pattern or a symmetrical triangle pattern. In some ways, this pattern is incredibly easy. You wait for a break above the upper boundary or a break below the lower boundary. Whichever way that happens, that's most likely the direction of the momentum going forward. So Apple, Meta, NVIDIA, AMD, those are some of the growthiest names to be following here this week with some interesting technical configurations. Folks, we're out of time. We're going to call it a show. Thank you so much for joining me here on Chart This with Dave Keller. Thank you so much for liking the video, for sharing it with others at your firm, others that you know, others that you invest with. We appreciate you doing so. Please take a moment and ask a question in the comments section on our YouTube channel. We'd love to maybe feature that on our next mailbag episode. In the meantime, I'll say have a wonderful evening here on Tuesday, February 24th. Well wishes to all of you. And remember, it's always a good time to own good charts. Take care, folks.